All right. So there are a few specific patterns that we've identified in the penny stock market that are repeatable and we can easily profit from them. Some of these patterns are what I like to call setups. One of the setups we're going to look at into today is the VWAP dip buy setup. So VWAP, as previously discussed, is an indicator that we use to gauge the strength of a stock and the average price throughout a period of time. So with this VWAP dip buy setup, we look to focus on high volume stocks that's up big on the day, usually 10% or more. We want stocks that are bullish in nature, which means they're making higher highs, that they're you know gaining value over time, at least in the the intraday session. And we want to look for stocks to kind of become overextended. So there's been a lot of buying. The stock price has been rising and rising, and hasn't been too much selling. And we're at a point where, hey, this is getting a little bit outrageous, and it's a little bit far without any sellings. That's considered to be overextended, and we look for it to be overextended past the VWAP indicator that's listed on our chart, and we'll see that in just a second. When playing this setup, you always want to be prepared ahead of the time by having your order and your position size already kind of mapped out and ready. And you want to kind of have it near that VWAP area or right above the VWAP area. Some of these stocks, whenever they uh, sell off and drop, sometimes they don't make it all the way to the exact VWAP price. Sometimes they stop just above it. Sometimes they make it to it. Sometimes they go below it. But just know that VWAP is a range. So if the stock dips below VWAP, look for signs of bottoming, like long wicks. We talked about topping and bottoming back in technical analysis. Um, Green candles with long wicks or shadows to the bottom side indicate that that's a bottom. So the stock, once it bottoms, it should bounce and buying should speed up after the bounce is confirmed. That's what we're looking for in this dip buy entry um, off of the VWAP. Ideally, once we get an entry at or near VWAP, we want to look to sell into the higher day test or the higher day break. If you're looking at a VWAP entry into a swing play or overnight play, or you're convinced there's more upside to the stock, you can hold past that higher day test slash break, um, being that the chart confirms that, and that's usually in the form of a higher low. Now, if the stock goes below VWAP or cracks below VWAP and bounces, but gets rejected back at VWAP, like VWAP support becomes a resistance area now, it's time to get out. You need to cut the losses quickly before it leads to more downside. So let's take a look. So this is my drawing example. This example, the black line is the chart, the frame of the chart. The green line is the actual stock price, and the yellow line is the VWAP indicator. So in this example, the stock spikes up, um, comes to a high, and starts selling back off. When it sells back off, it sells back to this VWAP level, and even goes down past the VWAP level a little bit before bouncing and continuing back up. So this is where we look for when I say stock is overextended beyond past the VWAP level. Look how much space is in between my pointer and the VWAP level right here. Now is even more space. Now is even more space. Now is even more space. This range from the top of this high down to the VWAP indicator is very high compared to where it was at right here. So in my opinion, that's kind of overextended when it comes to looking at the VWAP level. So when the stocks become overextended like this, expect this sell-off. Stocks don't just go straight up and down, it's just peaks and valleys. So there will be a sell off, and it's usually back down to in this VWAP area range. And that's where we look to buy. Once we buy, we use this range from the VWAP level to the higher day as our guide of how high can the stock go. So once you buy at this VWAP level, we look to take profits at the higher day test or break. So right around this area right here, as previously mentioned. So that's the VWAP dip buy slash sell. A lot of times, the stock will, let's say, forget the first half of this chart. Let's say right here is the beginning of the chart. The stock goes up, it comes down, and it breaks under VWAP. However, it comes down and breaks under VWAP and gets rejected back at VWAP. VWAP is now a resistance area. This is an indicator to get out. This is when I say cut losses quickly. So take a look at this quote unquote chart and study it, because this repeats day after day in the markets, and you should be able to take advantage of it if you're prepared. So here's a look at the VWAP dip buy entry on the actual stock. This is MOGU. Don't really know what the company is, don't really care. I do care how the price action trades. So here it is, gaining momentum. It spikes up, puts in a high, and comes back down to this VWAP area. The stock drops to VWAP or slightly under, which is the perfect dip buy entry with the best risk reward. So notice the candle, the green candle with the long wick at the bottom. That signals that the stock is bottoming. It's running out of sellers. You make an entry at or near this VWAP area and look to sell right here near this higher day test slash break. So as you notice on the chart, the first this test slash break failed. It didn't break over this high and it came back down. So, you can either take profits or you can hold for a second trip because VWAP area hasn't been broken. It actually made a higher low looking at the technicals. This low is higher than this initial low. Stock went on. Let's pretend this is like another VWAP entry because sometimes it comes down to VWAP, sometimes it comes down just above VWAP. Let's say you made an entry right here for the higher day test and it actually broke. So, and it actually went higher. So that's just one example. Another example, FNMA. This one spiked up in the morning, put in a high, came down, broke under VWAP, but had that candle that we're looking for, with the long wick at the bottom. Volume came back in, it broke back through VWAP and continued higher, and it actually, it attempted to test this 425 level before coming back down and bouncing off of VWAP again. So VWAP is a good indicator because there's a bunch of opportunities for you to get in and make quick, you know, ideal risk reward money.